We're meeting Africa's largest lender in one of the world's most dynamic financial markets. Here at the CNBC studio in Nasdaq, Dubai, we're in conversation with Mr. Kenny Fihla, the Chief Executive of Corporate and Investment Banking at the Standard Bank Group. The Standard Bank Group covers 20 African countries and has a 160-year-old history. Mr. Kenny Fihla, you're here in a very hot Dubai from a very cold Johannesburg, so a very warm welcome to you to the studios this morning.
Thank you very much for that.
Standard Bank has a 160-year-old history, but you have a very diverse and professional history yourself. You've been with the bank for 18 years now. And before I dive into all the transformative projects that you've headed up at Standard Bank, I would just like to step back a little bit in time and talk about those early days when you were involved with the trade union movement in the 1980s, and then you're also famously known for turning around the city of Johannesburg in the 90s. Can you just take us back? This was in the 90s, just after the the days of the apartheid, the country was opening up. What are some of the lessons from then that you're still using in your profession and your business today?
No, thank you very much for that question. Let me start by reflecting on the experience in the trade union movement. When COSATU was formed, which brought together 3 different federations that were UDF aligned, aligned to the Black Consciousness movement, as well as FOSATU, which was more extreme sort of left. I was asked to join a union that was called General and Allied Workers Union. By then I was a student activist. So when I was asked to join that union, it was with a view of ensuring that there are more people who were aligned to the UDF who form part of COSATU. So I joined GAU. But GAU was a generalized sort of workers union. And COSATU's philosophy was to have industrial unions, unions that were specializing in specific sectors. So I moved then to join Paper, Printing, Wood and Allied Workers Union as part of the team that came from GAU. That was a very useful experience. I had no idea what trade unionism was about, and I had to learn from people who were already in the trade union, but I also had to learn from shop stewards who were experienced and seasoned, which just underscores the point that you never stop learning. Sometimes you learn from people whom you think you are supposed to lead, but because they've been in that area for long, they understand the issues, they will teach you and make you grow. And the trade union movement was a very, very useful learning point for me, not just in terms of labor-related issues, but just in terms of how sophisticated ordinary people can be, how genuine their wishes are, and how basic people really want to engage and deal with issues. And if you attend to those issues well, you can make a huge difference in people's lives. The experience in the city of Joburg came a decade later, and that after the 1994 elections, there was an interim arrangement that was established to deal with municipalities. Then the actual elections for local government happened in 1995, November 1995. I then joined the city of Johannesburg as one of the leaders of the ANC and as a member of the executive committee. But the city also went through a transformation where different local councils were created. And we had an ambitious expenditure program, building roads, houses, trying to address issues of dealing with clinics, with community parks. So we overspent money that we didn't have, and that put the city in a financial crisis where the city was overspending by about 230 million rands a month, and that was money that the city didn't have. That created a crisis which required then an intervention to be made. The then Minister of Finance, Trevor Manuel, and Jabu Mulekedi, who was the MEC for Finance in Gauteng, issued a proclamation that established a committee of 10 people. I was appointed chairman of that committee. The role of the committee was to restructure the finances of Johannesburg, deal with the crisis, deal with the root causes of the problem, and create an institution that was far more sustainable into the future. That was one of the most useful experiences. I mean, I've learned a lot there. Firstly, how do you turn around a sick organization? How do you go around identifying the real causes of the problem? And how do you manage complex stakeholders ranging from councillors who came from different political organizations to employees who were highly organized from the trade union movement, who thought that now that I was the leader of this restructuring, I was effectively acting against the interests of the workers, because it meant changing the institution. It meant dealing with wastage and eliminating it. It also meant tightening the belt and restructuring how council was run.
The reason I started with that question is, of course, because South Africa is going through a very historic phase right now. After 30 years of democracy with the ruling ANC, now we're entering an era of coalition politics. But I'll definitely ask you that question a little later into the show. But firstly, let me talk about your passion for climate change, handling the climate crisis at the helm of Standard Bank, also all the renewable energy projects that you're getting into. And with Africa's great energy deficit, the energy poverty, we're a very vulnerable continent. You've been scaling up those initiatives in the renewable energy space. Can you just take us through a little bit about what you have planned and what are some of the projects that have taken off in the emerging markets?
The demand for energy transition in Africa is huge. It is estimated that Africa will need about $1.2 trillion worth of investment to enable, firstly, energy security, and secondly, the transition away from fossil fuels into more sustainable energy. That's a lot of money. And that amount of money is not readily available within the African continent, which requires then partnerships with other investors and pools of capital from outside of the continent. From a Standard Bank point of view, we have committed to originate and raise, and we'll also put our own money, anything between 250 to 300 billion rands in a space of about 5 years. We are already 40% of the way there, and we think there's still a lot of work to be done. But that's just one institution, and given the total amount of money that is required, that is just not enough. So we need a partnership of a whole range of financial institutions to enable Africa to have energy security as well as to be able to transition. The second challenge is about how do we ensure that people who are not connected, who do not have access to electricity, actually get access to electricity. It is estimated that less than 50% of the population of sub-Saharan Africa has access to electricity. Now that's a huge number of people, over sort of 700 million people who do not have access to electricity. How do we help get those people reliable forms of energy that are cheap, that are safe, and that are sustainable well into the future? So we also have to look then at transitional measures that would enable access. The third element has to do with the impact of moving away from fossil fuels into renewable energy projects. Some of the towns, if I may use South Africa as an example, were built around coal mines, were built around coal-fired power stations. If you move away from that fuel source, you need to manage that transition in a manner that does not create massive unemployment and massive poverty to those small towns. So a just transition is also a key requirement of the energy transition that Africa ought to undertake, but it must undertake it in a responsible manner and in a manner that does not cause hardship to ordinary people. So we've partnered with a whole range of players in renewable energy projects that have been initiated in South Africa. Those are expanding to other geographies. We've seen private sector companies entering the space of self-generation, where they generate their own electricity. We've also seen the entry of players who aggregate. They generate electricity and then they rent out then their equipment, or people pay based on the amount of electricity that they use, and we call those aggregators, because people don't have to initiate the capital outlay upfront, but rather can pay as they use. And we think that's going to expand and cover most of sub-Saharan Africa. That solution is going to enable decentralized energy, where you don't have to invest massive sum of money building the national grid but you create localized grids that give people access to electricity and deal with this energy poverty and energy shortage.
Right. And your mandate is for achieving a portfolio mix that is net zero by 2050 and this just transition to the low carbon economy. And at the end of the day, as you rightly said, it's about giving affordable electricity to the man on the street, to these households, to power economies, to power transportation, and it's giving them what is the most basic thing. But at your end, what are you looking at in terms of these kind of opportunities in the emerging markets like the DRC, the Namibia? I think you have a project there as well. How far have they come in terms of realization, and when do we see them?
There's a lot of ground that has been covered.
Yeah.
We have already enabled about 3.5 gigawatts of electricity that is under construction at the moment, in the form of solar sort of installations and power plants that have been developed, wind plants that have been developed. We've also partnered with a number of institutions, including governments, who are working on various initiatives. The first set being initiatives that are driven by state-owned entities, where they will issue tenders, invite the private sector to build renewable energy generation, which will then fit into the grid. That has been the bulk of what we've been doing up until now. The second set relates to private companies that are building their own self-generation initiative, either for their own buildings or for their own plants. That portion of our work is covering South Africa, Namibia, Kenya, Zimbabwe, Nigeria, and is expanding to cover even more countries. We think the biggest growth is going to come from that second piece of work that we do with private companies. The third set that we do it with companies who effectively are in the business of managing and running solar or energy generation. They can do that on behalf of government, or they can do that in order to supply to individual homes. That portfolio is also growing. And we will invite investors to come into sub-Saharan Africa, partner with us as we identify these projects, invest because we think it is good business to be done, but it also has a massive impact in terms of unlocking the economic growth potential and just improving the quality of life of ordinary people within Africa.
So you mentioned these activities in the private space as well, besides the state-owned entities. So in the private sector, we're very particularly keen on the small businesses as well. We, in Forbes Africa, most recent covers on the small giants. And we have a number of young enterprises coming forth with off-grid solutions, like you mentioned, as aggregators in the IPP space. How do you incorporate your activities with the SME sector? How are you unlocking support for them in terms of sustainability-linked financing solutions, etc.?
The solutions that we've developed cover a wide range of banking products, from giving people access to their existing loans, where they could access their loans in order to fund solar initiatives or wind initiatives. That's much more easier for individuals because you can use your home loan to effectively take a little bit extra in order to put solar panels on the rooftop of your home. For small businesses, the best solution lie in the use of aggregators who can develop solutions for a specific area and get individual companies within that area to effectively subscribe and have access to reliable, cheap, and much more sustainable energy over a long period of time without having to fork out massive capital upfront, because small businesses tend to run on very, very tight cash flows. So aggregators provide an appropriate solutions for them.
So in practicing this sort of responsible investment that you practice at Standard Bank, how easy or difficult is it to get this multilateral, multi-stakeholder support from the governments and all of, what are the regulatory hassles that you have to go through? What are the risks involved?
The situation has improved over the last couple of years, and I wish that some of the changes that were made much earlier. South Africa had a limit on what people could self-generate themselves of 1 megawatt. That limit effectively stopped the private sector from investing and generating electricity on their own. That limit has been removed completely in the last 3 to 4 years. And as a consequence of the limit being removed, we have seen an explosion of private sector self-generation, and we've seen an explosion of investment into the energy sector within South Africa, which just shows how regulations can stall the development of a particular sector and deprive the country of access to additional funding as well as access to new energy forms and new energy supply. By just simplifying the regulations and opening up the way, we've seen that grow quite substantially. The second set of regulations that needed to be sort of resolved was just to harmonize the rules between national government, energy department, ESCOM, as well as municipalities. There's still a lot of work that needs to be done in that space, but a lot of ground has been covered. For example, if someone generates electricity in one part of the country, but there's already surplus supply in that area, but the demand lies tens or hundreds of kilometers away, how do you transport or wheel that electricity to the other hand?
Right.
You need the grid infrastructure. What is the tariff regime between the supplier and the demand? And how do you know that the electricity that is supplied by a private supplier on this end will actually go to a customer who's contracted to that supplier on the other hand? What are the pricing mechanism between the two? And what is the pricing mechanism with regard to the grid? What are the rules of dispute resolution, legal contracting, and so on? All of those is being sorted out. And we think over time, those rules will settle and will make it easy for an integrated electricity supply that has multiple players with the national grid providing the sort of transportation infrastructure for these electrons to move from one end to the other. South Africa is slightly advanced in that regard, but we think the policy framework and the rules are replicable to other parts of Africa.
Right, right. And a slow and deliberate and measured approach, but I think in South Africa we need the results sooner because of the load shedding crisis that we've had in recent years. But again, as you alluded to, the supply chain, the more effective power supply chain. But tell us, Mr. Fihla, what is the potential that Africa offers in this regard, in this regard of the renewable energy space? What are the opportunities that it can sell to the rest of the world? Do you see a point where we're exporting these concepts to the rest of the world?
I think there's a lot that Africa can export to the rest of the world.
Yes.
I mean, some of these bad sort of experiences are in themselves good lessons. When we talk to people who come from the developed world, the whole concept of load shedding, where you proactively manage demand and supply and plan when to switch off what area, is on its own, I mean, a useful experience in order to protect the grid. But you don't want to live perpetually in that situation. And so the second lesson is that if governments and regulators quickly remove the regulatory obstacles, you can unlock a massive potential from the private sector and from your sort of community. And South Africa is the case in point. There's about 12 sort of gigawatts or 12,000 megawatts worth of electricity that is currently under development. That is about 20% of the installed capacity of ESCOM. That's quite a lot. And that has happened in the last couple of years, which just shows then that if you create the right regulatory environment, you can unlock the potential and the power of the private sector. And there's something powerful in that, and there's a lesson that can also be replicated in other sort of sectors, that government need to set the rules, but those rules must enable society to grow and to develop, and must be aimed at tapping into the potential and the capacity of the rest of that society. The third lesson is that partnerships are a powerful way of dealing with challenges and problems that confront many of our countries. We all want to get to the best possible outcome. And if we try and do it individually, unfortunately, our efforts will have a limited impact. But if we align the interests of different stakeholders, suddenly the impact is substantially bigger and we get to the desired goal much more quicker.
Speaking of South Africa, the new the political dispensation, the climate there, Where do you think we're headed in terms of more job creation? You know, it's going to be an experiment with the new era of coalition politics. From a banker's point of view, how do you view this scenario in total?
I think it's an interesting scenario. We live in interesting times. But if one looks at what has been happening globally, coalition governments are not new. I mean, they have been in existence in many of the European countries for quite a while. Some of them are much more stable, better functioning. Others are stable but dysfunctional. So we would want to gravitate towards more stable and better functioning coalition government. And South Africa has had a history of a government of national unity after its first democratic elections, where President Mandela went out of his way to create a government of national unity, despite the fact that the ANC had the majority. I think now we're forced by circumstances because there's no party that has won a majority in parliament. But there are some positive things that have come out. Here's the ruling party having lost its majority. It has accepted that it has lost its majority. It has endorsed the outcome of the election and is managing the transition in a responsible manner. That is something that is extremely positive and good for Africa and for the developing world. Secondly, there's engagement across political parties. And the initial reaction from some of the major parties has been extremely positive, with all of them committing to work in the interest of the country, bar one or two who have objection for their own reasons. But by and large, most political parties have committed themselves to working together in the interest of South Africa with a view of stimulating economic growth and ensuring that the will of the South African electorate is respected. I think that alone demonstrates a high degree of maturity and is something that must be cherished. So I'm far more optimistic about the future of South Africa. Of course, it will bring new dynamics. It will change the rule of the games, but I think it's going to have much more stronger checks and balances. And if managed properly, it could actually stimulate a massive economic growth in South Africa and send a very positive signal about the art of the possible if people rise above their petty political differences and act in the interest of the country.
Art of the possible, I like that, and hopefully it will come to fruition. I just want to, now we've spoken about economic growth, we've spoken about energy security. Can we just dwell a little bit about the emerging technologies of the day and how Standard Bank is leveraging off AI, you know, all of these new technologies, blockchain, how are you seeing all of that change the world of financial services in general?
Financial services is in a process of continuous change. We have seen the emergence of new technologies, the emergence of much more cheaper forms of providing banking services. Old banks have convoluted IT infrastructure, more like a spaghetti with massive risk and a lot of manual work in order to try and pull things together. But technology has enabled the simplification of many of those services. Payments now have become easily accessible, covering a whole range of players, even beyond banks. The cost associated with that service has become significantly cheaper. And blockchain is providing an avenue to modify that even further and to also reduce inefficiencies and improve the effectiveness of financial institutions. We've also seen the use of technology which enhances the leveraging of data. Banks are sitting on massive amount of data on the basis of client behavior and so on. That data is not currently being optimally used to benefit clients, to anticipate what their needs are likely to be and proactively offer solutions that are best suited for them. Suddenly with AI, we can do that. And we've started to do that at Standard Bank in some of our product offering. But of course, there are also risks that come with AI. AI is dependent on the data that you have, the historical patterns, and if those historical patterns were discriminatory, we are likely to have discriminatory practices being perpetuated now by machines because they're picking up on those data and those patterns and using them to develop new solutions. An example would be if you use AI to make decisions on your home loans. If your historical patterns had red-lined specific areas and were punitive to certain segments of your customer base, AI will simply perpetuate that practice. So you also need, therefore, a human being to work with machine in order to look out for discrimination, for inherent practices that may not be fair and equitable across your entire client base.
I mean, we're sitting here in one of the biggest financial markets in the world, in Dubai, and this is a city. I mean, it's part of the United Arab Emirates. Is known for the digital expansion that they've had. The digital economy is very much alive and thriving. And recently, as you may have read, Dubai has also been rated one of the leading hubs, perhaps the number one hub in terms of attracting foreign direct investment. What are the lessons from a country like Dubai, which has been such a great success internationally? Everybody wants to model, wants to use Dubai as a role model. What are the kind of associations or the activities that you have in this region for Standard Bank? You have a presence here, you have an office at the Dubai International Financial Center. What is the kind of affinity you have for this region at the moment?
We see a lot of potential that the African continent can derive from the association and interaction between corporates, funds from the UAE and the Middle East, broadly speaking, with opportunities in the African continent. We spoke about the energy transition and the amount of capital that is required. This region has well-established sovereign funds and entities that have the capital and are looking for opportunities. So our office here seeks to make those connections so that we can leverage what we don't have and offer clients as well as investors from the Middle East opportunities that sit in the African continent, which have significantly higher return and massive growth prospect into the future. The second most important lesson here is about leadership. The leadership that has been demonstrated by the UAE president as well as leaders, broadly speaking, is unbelievable. We're a place that is not endowed with arable land, not endowed with minerals, as is the case in many of our African countries, not endowed with a large population, has been able to transform itself into a significant hub that connects the Middle East to Europe, to Africa, to Americas, to Asia, as well as to the the Oceanias. I mean, it's unbelievable, the transformation, which just shows the power of leadership and the power of having a proper vision and being able to execute that vision with diligence, with discipline, and consistently over a period of time.
A big thank you to our guest in the CNBC studio at Nasdaq Dubai today, Mr. Kenny Fihla. He is the Chief Executive of Corporate and Investment Banking at the Standard Bank Group. Thank you for watching.